Hello, gas, electricity and oil prices have all risen this week, so let's see what's been happening in a bit more detail. Brent rose on Monday and gained nearly $2 per barrel day on day. Pressure came as US production decreased and the working rig count fell for the first time in nearly 6 months. Prices softened on Tuesday morning as OPEC production had risen during June. However, strength returned to prices in the afternoon and front-month Brent closed range-bound. Prices were directed lower on Wednesday thanks to a report that showed OPEC's exports had increased by 450,000 barrels per day in June compared to May and 1.9 million barrels per day compared to the previous year. Downward movement was short-lived and Brent rose again on Thursday, directed by the EIA report showing a decline in US commercial stocks by 6.3 million barrels. Last night, Brent closed at $48.79 per barrel, up just over $1 per barrel compared to last Friday. Increased exports to the continent via the interconnector left the system short Monday morning. An increase in LNG send-outs reduced the deficit, although the system remained 10 MCM short. System tightness pushed prompt contracts higher, which filtered through into the near curve. Longer-dated contracts took their direction from bullish oil. The early downward direction of oil on Tuesday pressured gas contracts lower. Prices continued to move downwards throughout the day, thanks to the impending arrival of 2 LNG tankers in the next 5 days. The biggest mover day on day was the front month's contract August, which shed 1.1 pence per therm. Prices were mixed on Wednesday, with prompt prices rising in response to a tight system, whereas curve contracts took their direction from falling oil and a healthy LNG supply outlook. Near-term prices closed range-bound on Thursday, whilst curve contracts closed higher, directed by a rise in oil. Last night, all contracts closed higher than last Friday, with Summer 18 gaining 0.35 pence per therm. Prompt and near-term contracts found support from forecasts of higher demand and a reduction in solar and wind generation. There were also forecasts of reduced nuclear and CCGT availability this week due to ongoing maintenance programmes. Despite tight supply margin, all curve contracts closed the session lower day on day, taking direction from their gas counterparts. Gas prices once again directed electricity prices on Wednesday, and most contracts closed lower. Prompt prices, however, were supported by system tightness. Wind generation was forecast to outturn at just 1 gigawatt. Prices then rose on Thursday, and most contracts closed between 0.2 and 0.4 pound per megawatt hour, higher than last Friday. You can download this report from our website. Thank you for watching, and we'll see you next week.